margins under pressure, assets under management are dipping. The market is going to be pretty disappointed with this set of numbers. What are you going to do to shift the dial in assets under management? Where have you lost the assets from, and what are you doing to turn it around?
Thank you, Manos. If I look back in 2018, we had a fantastic first half. It was obviously more difficult in the second half for the whole market overall. Very clearly, we lost, assets under management through the market developments, the weak equity markets. Actually, I'm quite proud with the net new money figure, 17 billion. More than 17 billion is the second highest number we had ever in history of Julius Baer, and it came really from all different areas. The pressure on the top line margin is coming from two angles. One angle is a lower client activity in the second half, specifically also November, December. That's one element, and the other element is performance-based fees, mainly from Kairos, have been lower compared to 2017. I'm quite happy with the fees on the assets. If I exclude the commissions, they went up by 8%, in line with average assets under management.
Look, Bernhard, there's a couple of questions that are going to come to every person that looks at your stock. They're going to say, this is one of the weakest performances on the SMI. What I want to know from you is this target, 4 to 6%. Would it not make more sense, Bernhard, to shave back our expectations of what is deliverable in 2019, or will you hold resolutely, I can deliver 4 to 6% 2019?
No, we feel comfortable. I feel comfortable, Manos, that we can deliver the net new money based on a couple of elements. We are positioned very nicely, in the markets globally. We have also entered some new markets, and we have focused really on the markets where we can make a difference. I give you two examples. Last year, we invested into Thailand and into Japan, so we'll see some net new money inflows from there. And as we commented a bit more on the profitability side, there we have put the cost program in place, which is a combination of general expenses and personnel expenses to come closer to the 68% target.
Bernhard, it's Naira in London. Good morning. Great to have you with us. You've mentioned some personnel expenses there, and I do want to ask you about personnel because the fight for talent in wealth management is well known. Your predecessor, Boris Collardi, is said to have held talks with potential new hires throughout the industry towards the end of last year. Are you worried about losing talent to Pictet?
No, look, we respect Pictet as we respect the other competitors as well. Last year we have done really well. We attracted more than 100 relationship managers to our platform, which shows the attractiveness of our platform, this pure wealth management concept. And I'm very optimistic that we can deliver on sort of what we call the normalized hiring of about 80 relationship managers a year. That also contributes, obviously, to the net new money.
Yes, indeed. And Manus talked about the stock drop. The stock drop last year, dropping more than 40%. It's recovered a little bit this year. But with where the stock price is at the moment, are you concerned that Julius Baer is a takeover target now?
Good question. No, I'm not concerned. I would say for two reasons. If you look at the valuation, yes, of course, we lost a bit of our premium. But if I look at price to book, we trade at 1.5. Price to net book, it's almost 3. And now if you compare that with some of the competitors, it would be difficult for them actually to come up with a takeover plan and then to persuade the shareholders that it's accretive. That's number one. Number two is also, in our industry, there are almost no unfriendly takeovers because it's a service industry where you need also to have the clients on the clients and the people on board. So with these two facts, I'm comfortable, and I think the risk for a takeover is actually low. And believe me, the board and me, we want to continue to be in the driver's seat.
OK, you want to hold on to that independence, Bernhard. What the market needs to know is whether there's been any demonstrable shift from the clients. We've reported on Credit Suisse and UBS. We're 1 month in. Have the clients shifted? You bad vol before Christmas. But how is January, month one, shaping up?
Yeah, look, of course, it's positive for us, and I think for the industry that the equity markets are up almost 7%. That's also positive for assets on the management development. The exchange rates have also turned into our favor, US dollar versus Swiss franc, euro versus Swiss franc, the pound versus Swiss franc. If I look in client activity, it's probably a bit early to say, but what I see and the discussions I have with clients is definitely higher than November, December. So it has picked up. But it's not at the level that we saw first half 2018.